Let's bring in David Nelson. He's a chief strategist at the Belpointe Financial Group. He joins us now from New York City. David, thanks for joining us. First, the Fed's decision.
Thanks for having me.
Not a big surprise here. The second increase in 8 years. What is the biggest takeaway here?
I think the surprise here was that looking out that we're looking at 3 hikes in 2017. Coming into this meeting, I think most of us, including myself, were looking for only 2. So it was a little bit more hawkish. Markets got a little rattled by that, hence the sell-off. We had a rising dollar that didn't help the situation. That helped drive down oil. Brent actually closed below 54. A lot of this rally has been on the backs of strong crude. So when that sold off, that was kind of the trigger to sell. And we took a pause today.
How do you think global markets will react to this news as the rest of the world wakes up here this morning?
Good question. I think a lot of global participants have been looking at the United States and looking at interest rates here. You know, we're approaching 2.6% in the 10-year. That's got to rattle some people out there. It's kind of the end of the bull market in fixed income that really started all the way back in the early 80s here. I think, maybe there's a pause here, but I still think 20K, 20,000 in the Dow for this year is probably in the cards. This is a pretty bullish time of year, and actually the last week of the year is probably one of the strongest. So I still think we have a shot at getting that, and if not, we'll probably hit it early in the first part of the year.
Well, I want to ask you about that 20K. Everyone's been watching the Dow here in the last day or so. That will continue, watching those numbers inch higher and higher. Record territory, but what are your thoughts? You mentioned that, but can you elaborate?
Well, I'm not sure it's that important a metric. It's fun. We put our party hats on. I was down at the exchange today. Everybody had them. They didn't get a chance to wear them today. The Dow is a price-weighted index. It's led by high-priced stocks like Goldman Sachs, which is up over 35% in just the last few weeks. So it's a big part of the rally. But Goldman is hardly a barometer of the economy. I would look to other companies for that. Look, I'm encouraged as much as the next person. I think the prospects for higher markets, at least here in the U.S., are pretty strong. A lot of the rhetoric I'm hearing from the administration is creating a bullish tone, creating animal spirits within the markets. The rollback of regulatory overreach in the financial sector, that's certainly good news for the banks. But I would caution here that a lot of this is on the come. Both in U.S. markets and world markets. A lot of this is based on a lot of policies that are likely to take place. But here in the United States, we elect a president, not a king. So a lot of these policies are going to be tempered. There's still Democrats in the House and Senate. There'll be pushback. There will be compromise. Some of these policies will be diluted.
And very quickly, just your global economic in the United States, but there have also been and could be some leadership changes in Europe in the upcoming year. Also want to get your thoughts on China for 2017.
China's always, it's the second largest economy in the world, likely at some point to become the first. What I look at in China is, some of the reforms that are in place. I think President Xi, he's trying to unwind some bubbles in certain parts of the economy. He's trying to do it slowly. If he can manage to pull that off, then I guess we'll be okay. But I guess for me as a U.S. portfolio manager, one of the things that concerns me is, can I trust the numbers? Are the numbers the government is putting out there, are they really matching what's happening economically in the country? If I can believe that, then I can put money in China.
All right. David Nelson, appreciate you joining us from New York City.
Thanks so much for having me, Elaine.